I was looking at your interesting facts. So you have a course for skydiving. Is that correct? Are you skydiver?
Yeah, I make, yes, I passed the what is called the AFF.
Yeah.
That is
Okay.
the first step to become. Oh, are you guys
Uh,
skydivers?
I've done it once with I was attached to somebody.
Okay.
I did it in the military, and also they did it. I probably jumped probably 200 times at this point, but
Oh, amazing. Yeah, I have around like, yeah, I have around like 30, 35
yeah,
jumps. So yeah, I'm going for the license
yeah, it's
A.
great. That's awesome. It's definitely
That's cool.
Yes, yeah.
yeah,
Yeah.
How'd you
Okay,
get
we
into
can talk
that?
about that.
yeah,
How'd you get
Huh?
into that?
yeah.
I started just tandem one time with friends, and I love it. Um, Another time, one of my best friends also told me, "Hey, let's go tandem," and we really like it. And he told me like, "Hey, why we don't do this more often?" I was like, "I love it. I would like to be professional in this."
Yeah.
He said, "Okay, let's do a deal. He will become a pilot, and I will become the skydiver." That sounds crazy and sounds funny, but that's how we end up doing
That's
it. He ended up taking courses to be a flight pilot,
Yeah.
and I started the AFF. I went and actually I didn't know the whole process that you have to go into that.
yeah,
And I was just like, I'm just gonna go one weekend, and it's how how difficult it is to jump out of a plane, right?
Right.
Man, what I learned about skydiving for
yeah,
life, for trading, for a lot of things, preparation, the mental strength, be calm under pressure. You have to pass like 11
yeah.
jumps. If not, you have to repeat and blah blah blah.
Hmm.
I passed them all without any failure, and they were very proud. That's not very easy. Anyway, that's how I ended up. One of the guys who was taking the course with me, we were like two guys doing the program at the same time. The first day he was jumping, he was fine. We were like supporting each other.
Yeah.
And I learned if you skydive, Mike, the worst or the newbie one goes into the
Yeah.
end. The most experts goes first, jump first, check everything,
Hmm.
and the newbie goes to the end. And since we were doing in the same level because we were starting to skydive by ourselves, we were supporting each other, right? And say, yeah, you go and get it. And it's very traditional, like you do these things, so you say like you are fine and everything is cool. This guy quit, and we were in the plane, and he got a panic attack. He couldn't
Oh
make
no.
it, and he said like, I cannot go. And he was in front of me, and he was like, I cannot go. Let's stop this. I don't know what I'm doing. Blah blah
Just
blah. And I was
nervous on the
jumping after
spot.
him,
Yeah.
and he couldn't. He quit
Oh
forever.
wow.
Yes, so it was quite of experience. That's how I ended up over there, and actually it teach you. We can talk about that if you want, but it teach you a lot about life preparation, golf. When
Say
you
more.
when
Yeah,
if yeah,
yeah,
so same thing. So yeah, and back in them, I jump less now that I have a kid, but yeah, I enjoy
yeah.
it. Go to iFly when I
Yeah,
can
that's
in
great.
the
I
winter.
do that as well. The family in Texas, we go to like quite a bit. But to your
Really?
point, though, yeah,
Okay.
Carlos, I was probably you did the whole thing, the static line, you did that for a while, and you do your personal jump, which is a bit unnerving, right? You're gonna have to have a mental like heart to heart with yourself as you go up in the plane. But we had a situation. I'll give you one example where there was two newbies with us. He's like three, and then the jump master, whatever.
Uh-huh.
One person got out there on the wing of the plane. They hold on, and then you let go. He froze. He
Uh-huh.
freaked out. He froze. And so the pilot's like looked at jump master looked at the person and just dipped the wing of the plane, and there they're gone. Pretty simple,
That's a lot.
because you can't go back into the plane once you're out there. That's it.
Okay, so
Yeah, no.
my only skydiving experience is once, probably a decade ago at this point, but it was, it's funny. So, you get on I call him first. I'm just like, we don't want to do the tandem. I think, I just want to jump. And I didn't know what the rules are. Obviously, you shouldn't be doing that your first time.
Yeah,
But then, we get on there. So the guy, strapped to him, he's like walking there. And I was kind of ready for, like a jump or something. This guy just goes like backwards.
oh,
Just scared the
you're
shit
like,
out of
what am
me.
I doing? Yeah, I got. It's funny. You learn to logistics when you get out. It's different to try to figure out where you're at, get your bearings, as you know, Carlos. You
Yeah.
try to navigate down to the earth, and it's a little bit different than getting the directions driving a car, right?
Yeah, there are two things that are very interesting. The first one, and it's a tip for everyone who does not skydive or wants to tandem the first time, you're always gonna tell you we're gonna count one, two, three. They always jump in two to prevent
Yeah,
anything. So to prevent that you hold or whatever. And the second part is like the fear. you always have fear. Like, I don't know, you Skylar, but in every single jump, even if you are an expert, you are super prepared, you always have that because we are humans. But something that is very interesting is the fear is in the plane. Once you jump, and I don't know if that happened to you, Mike. Once you jump, you enjoy. You are in the sky and you are high, and the fear is
So,
like doing the jump.
yeah,
Yeah,
After that is like, okay, that was it. That was fun.
yeah,
100%.
definitely. No, that's really cool. Yeah, to your point, there's a lot of life lessons and managing your own internal headspace when you're up in that plane for sure.
My graduation jump, that was the first one completely solo, no instructor. I have a twist.
Oh wow.
Wait, sorry,
Uh,
repeat that. What happened?
the first, so after you finish, so normally in that program, the first jumps, 4 or 5, you jump with one instructor, two instructors. After that, only one. After that, you have to go by yourself. That's the
Yeah,
real, like the real jump
exactly.
is when you go by yourself. No instructor, no one can save you if things go
Yeah,
wrong. You just go by yourself. All my previous jump were fine. I was landing, but the exam one, the last one that I did, I got a twist, my parachute
yeah,
twist.
Okay.
And after that, you have to be calm and start to think, okay, you have to flare. And it was so hard to win because this side was hard. I started to do like rounds like
oh yeah,
that.
Yeah.
And in that point is when you start to think, okay, what did I learn here? You have to keep calm,
yeah,
flare, figure it out. I landed and I graduated. And I don't know if that happens here or when I did it, they ring a bell when you graduate.
yeah.
Ding,
Yeah.
ding, ding, ding. So yeah.
Everybody has,
Anyway,
yeah.
yeah. It's awesome. That's awesome, Skylar. I didn't know you skydive. That's
Yeah,
amazing.
yeah, definitely. And to your point, I definitely like the first one you do, you pull yourself. Nobody's going to save you. It's definitely a unnerving thing. You have to really keep your mindset and head in check. To your point, because I had a situation where I've had my lines crossed, or maybe I got my lines taken on one leg, and I had to shake that off in midair, and that's a little unnerving because there's nothing you can do, and you're the only one.
And you have to figure it out before
Right.
2,500,000
That's
feet,
right.
2,500 feet, right?
Yeah, yeah. It happens fast too, in seconds. So,
Yeah.
Yeah.
very cool.
100%. Well, let's jump into it, Carlos. So, let me give a quick. Actually, why don't you tell us about your background? You've start with your story. How'd you get into finance? And then we'll get to where you are today. But like, give us your background. Tell us your story.
Yeah, absolutely. So basically, initially, as you can probably hear from my accent, I am from Colombia. I'm from Bogota. Um, Not the ones that appear in Netflix. Bogota is the capital. So I study actually business in Universidad de los Andes, really well-known university. And in part of my undergrad, I have the opportunity to study in different places. I study part of my undergrad in UNC, also business, taking some classes. I live in China for almost a year,
Hmm.
also learning Chinese, doing business, and I met a couple of people who were in Hong Kong trading. When I was in Los Andes, in my latest, let's say, 2 years, I got a passion for finance. The Colombian market was booming. It was actually after the financial crisis, so emerging markets were booming. The biggest oil company was there, so I got the first stocks and I started trading. They have a competition called Bolsa Millonaria. There is a trading competition. I won it, and I got involved with I used to teach Bloomberg. So there was
Hmm.
like a course for the masters guy, for the guys of the master, for the undergrad to teach Bloomberg, and I started to learn derivatives, and that's how I got in derivatives. For me, derivatives was like, oh, this is the thing that I love, and I always find the passion for solving the puzzle, finding new strategies, knowledge. I finished my career in Los Andes, and I went right away to work for uh, one of the largest trading advisory power trading firms in the country.
Hmm.
The founder of the Futures Electricity Future Exchange, the former CEO, he started this company. I was his right hand man and his first employee. And he was like, "Guy, you know derivatives. I can teach you power. I can teach you the energy." And I'm like, "No, I just graduated. Yeah, I do the basics." But no, really, he guided me. And I was in charge of the desk. I was in charge of hedging. I was with consultants. After that, I came to Chicago. I was with a commodity CTA. I also make a master in finance at the University of Notre Dame. End up doing really well, magna cum laude. And some people were asking me like, "Hey, guy, you are doing well. Why you don't start your own thing?" And in that time, I was like, "Yeah, I think I can trade." And I can start this firm. So I started Sigma Advance back in 2016, as a project, not really something just to test, create a track record. And I was behind Colombia and Chicago. And the reason I'm telling you all of this is because it's how I end up in the academic world. That is also my second hat.
Yeah.
So when I was in this practitioner part, I came back to Colombia. Los Andes told me, "Hey, you came, you have all this experience with derivatives, real experience. You have been in here in the markets. Would you like to teach financial derivatives?" And I was like, "Yeah, of course. That's my world. That's what I love." And that's how I started to be. I was the youngest professor of the faculty at that time. I was 26.
Wow.
It's awesome.
And the year after, uh, that's how I end up in other things. They asked me if I wanted to create the Center of Financial Markets. And that's how I end up and say, I have a work, I have a company. I will do it only with three conditions. If we research three topics. One of them was blockchain. Imagine
Hmm.
2016, blockchain for the development of financial markets. And I will tell you later on how I ended up in blockchain. We started mining back in 2013, have some coins, but I didn't even understand the technology. The second big topic was sustainable finance, where we really got into what carbon market was, compliance carbon market. Europe was making a lot of reforms. A lot of things were happening in that area. And the third one was mostly for managed futures, hedge funds, because that was a lack of knowledge in Colombia. And those were the three topics back in 2017. And they told me, "You are crazy. What are you talking about? We want to talk more about risk, about portfolio management." I told them, "Those are my conditions, or we explore those. I will be flexible with other topics, but those are my core." And they say yes. And that's how I end up researching actually blockchain. We have a class that I teach in blockchain and also in carbon markets. And that's how I end up developing one of the first carbon strategies in the CTA. In 2018, we became
Okay.
CTA registered,
Yeah.
blah blah blah, all of that, and
Definitely
that's
jump
how
into
we
that. Yeah.
and that's how it started. And until today, I do that. I'm with Sigma Advance. We always involve in different things now. Um, we have more flexibility. We're gonna go into that, but I do that, and in my passion, I teach. I teach at the University of Cambridge. I make another master in the University of Cambridge. I teach there sustainable finance. I used to teach at Notre Dame derivatives.
It's really, yeah, you got your plate full
Yeah.
for sure. You
Well
got you
done.
got skydiving,
Yeah.
we got teaching, we have trading, and running your firm here. But
Yeah.
talk to us about the teaching aspect. Is this are you like full-time teacher?
No, it's a part time. It's a passion. So
Hmm.
at the Universidad of Los Andes, I teach two classes, mostly once per year. One is financial derivatives for the Master of Finance, and what I like is to put all the things that you learn from the books, John Hull, Robert McDonald, and put it in real life and see
Hmm.
that some things doesn't work.
Yeah.
I love to put the example because I was trading crude oil back in 2020 when crude oil was negative, and I was that day we were doing the spreads trading, and I explained them, "Look, guys, if you don't understand that Black Scholes was only for stocks because prices in stocks cannot go below zero, you cannot apply that to commodities or other asset classes." And this is what happened in real life. And look, that's
Yeah,
exactly what happened.
changes everything.
That's what I do. I also teach blockchain, one class in blockchain every January. And in Cambridge is also one class in sustainable finance for the executive program.
Very cool.
Yeah.
It's a part-time passion.
That's great. That's awesome. So there's a lot. You have a lot going on. So you're got a lot of free time. You don't. So maybe
So
talk to us about the carbon markets. I mean, that one aspect, right? Explain for our audience kind of what that looks like. What are carbon markets? The role in addressing climate change. All the nuances that maybe you teach as well.
Absolutely, absolutely. Well, that can take the whole podcast, but I will try to be to
Give
be
us a
to
podcast.
be to be very
Yeah.
short, because first of all, one of the most important parts when we talk about carbon markets, and the first thing that I say is we have to differentiate voluntary carbon markets and compliance carbon markets.
mhm.
Our main focus has been in compliance carbon markets. What is the main difference? A lot of people knows the voluntary carbon markets. That is the one that if you fly whatever airline and say, "Hey, you want to offset your emissions, buy those offsets," it's called offsets because you offset emissions, and the supply comes from anywhere in the world from projects. One that are quite interesting, like carbon removal. You can buy today, let's say, direct carbon capture. That is can cost you $1,000 one ton, or you can plant trees and sequester, or you can have this type. This is the voluntary carbon market, unregulated, is all over the world, unlimited supply. I think it's going to a lot of changes. That's the one that you see in the news for greenwashing, for a lot of issues. And that market is very small. Actually, it's only around $2 billion, but it has a lot of attention. The compliance carbon markets is the one that is interesting for us and is the one that
Hmm.
we have been paying attention. As the name implies, first is compliance, is running by the governments. So in the United States, actually, is started back in 1990. I don't know if you remember, the US have a big problem with acid rain and the acid
Yeah.
sulfur. And you will imagine that the Republicans say, hey, we don't like taxes. Well, we don't create a market-based mechanism that, people like companies who pollute or can, if they can be free. If you want to pollute, okay, pollute, but you pay, and there is a market for that, and we put pricing on carbon. And actually, that's how you reduce the sulfur acid in 1990. When we have this conversation, there is a video in the 80s that asked one of the guys that I admire, economists, that is Milton Friedman, right? And Friedman say, okay, you don't want government for anything. And they ask him, what about pollution? And he say, look, maybe in that case we can be hybrid, and a cap and trade market mechanism can be the best. So Europe how that works, okay, is very simple. It's called cap and trade. So let's put the example of Europe. The US have a system, Europe has a system, China have it, but it's very similar. Let's say 80% of our emissions comes from 7 sectors. Normally power, that produced with gas, with coal, oil, cement, steel, glass. And let's say, okay, why we're gonna put a cap, or let's say your emissions this year is around, let's say, 1 million tons, just to put an example. And we want to reduce that to 50% in the next 10 years. So what are we going to do? We're going to put a cap, a limit on those emissions. We're going to create the same number of allowances. Involuntary is called offsets, and this is an allowance because it's a permit to emit.
Hmm.
In the voluntary space, you already emit and you offset. What we call in Spanish, you sin, you pray, and you are even. That's quite of controversy, right? In the voluntary space. But in the cap and trade, it's a permit. So it's very simple. Hey, guys, if you want to pollute, you can do two things. You pollute, if you pass your limit, you pollute and you have to have those permits. Or if you don't pollute, you can have your permit and you can sell it to anyone and have cash. So, and that supply reduced every single year. And imagine how many allowances or permits will be in 10 years, was half. And every those sectors and every company every single year has to present, and it's like just to present a report of the emissions that is really easy to measure, and they have to have the exact number of allowances. And imagine that that report is like SEC report, right? Like a public company. You have a methodology, you have to follow it, it's easy to verify, blah, blah, blah. And if you have an excess, you can do two things. You keep it for yourself for the futures, or you sell it in the market. And since the supply reduce, that have two signals. The first one is that the prices are going to go up, right? Basic economics. Less supply, same demand, prices are going to go up. And that create a very good incentive. And that's why we like cap and trade systems.
Yeah, I guess
Go
the
ahead.
like a question that first question that comes to my mind, how are these hopefully this doesn't like derail us too much, but how are these allocated? Like who needs to participate, and uh how is it determined like how much emissions that somebody
Excellent.
gets?
That's a great question. So normally, every system, let's say in California, is, let's say, only utilities, or can be a system that say, okay, it's going to be utilities and the industry, like in Europe. And every facility that produce normally more than 25,000 tons of CO2 per year are going to participate. And how do you allocate? Is the government make auctions of those permits? In Europe, it's normally every single day, and they say this year, based on our, let's say this is the year two, so we're gonna have only 900,000 permits. So we're gonna issue those 900, divide 300 days, let's say whatever the number is, every single day, and the companies are, those sectors are obligated. Any sector, any company that produces more than 25,000 should participate, because should comply at the end of the year. Okay, that's how it is. It's basically they decide what sectors are in, what is the minimum limit of emissions of facilities who are going to participate, and those those companies and sectors has to present every single year the number of allowances and the number of pollution.
Yeah,
Mhm.
makes sense. And you
Yeah,
mentioned earlier, Carlos, obviously the voluntary side of things, about 2 billion market size. What's the size of the compliance side from a
that's a really, really interesting question. So the total volume, just to tell you the total volume of this market, back in 2020 when we started, it was around 200 billion.
market?
Is
Okay.
this daily volumes or annual?
Okay.
Okay. Mhm.
Okay. So that's how, yeah, it's like volume traded by price. It was around 200 billion. Okay. And mostly was Europe because the main market was Europe.
Right.
Last year was $1 trillion.
Wow.
And
Wow.
this, and we expect in 2030 to be between $2 to $5 trillion. Why? First of all, more countries understood that instead of putting tax, instead of putting a lot of different ESG stuff, if you want to decarbonize, this idea is simple but powerful. Let me stop here a little bit to go to your question. Why you decarbonize here in the best and most cheap, efficient way, economical way? Because since you are not obligated to decarbonize, let's say you're a cement company, I'm a power utility, for me it's cheaper to change from coal to gas. And maybe what is called my decarbonization cost, that is called the abatement, can be $40, $30, $40. So if those allowances are higher than $40, I'm not going to produce how I'm producing right now. I'm going to change. Not because I have a big heart and I'm a philanthropist. It's because it makes sense in my bottom line. And as a CEO, I make more profit producing with gas instead of coal than buying that EUA. But for you as a cement, maybe your price is going to be 80. So until it's not 80, you're going to keep doing what you are doing. So that's how, and that's not a surprise that in the US and Europe, most of the decarbonization comes from the utilities and power, and because it's not kind of like an obligation but it's put a pressure, and when the price makes sense you start to change behaviors. So what happened, a lot of countries realized like, hey, this has been working, that helped with the acid sulfur in the US. Europe take that idea and make it the largest market. California have a market. Regic, that is the East Coast, has a market. Washington just started one. China, the biggest polluter of the world, say, hey guys, this actually makes sense. And 2 years ago, started their own cap and trade system that is going to be the largest in the world. India, Brazil, and 35 countries are doing it right now. Okay, so that means that not only the market has been growing, more market has been implemented or is in the plan to deploy, but also if you look at this market, it's very unique. Let's say I come from the commodity space. Let's think about commodities. Commodities, the main thing when you're a fundamental guy, let's say you want to understand supply and demand. This is the only market that you already know the supply. They are
Yep.
telling you. And it's the only market that, let's say, ceteris paribus is telling you we want higher prices. What happened is like a lot of, like, that's quite of interesting as an asset class, right? And you can jump in and say, hey, if I buy and the research and the politicians and the academics and the practitioner, everyone says that carbon, like the decarbonization price that bring this pressure to most of the industrials will be above 100 or 150, even some of them say 200. And today the highest price is only 80, before it used to be 20. You say, well, let's say they have a big standard deviation, but let's say the price is 80, you can be 3x this asset class or this market. So a lot of money start to come into that actually, plus with the reduction of supply that make that prices actually to go high. So a lot of activity came in, physical commodities, hedge funds, investment funds start to jump in, that also create a more liquid market and growth.
Yeah. Very interesting. Talk to us about with Sigma Advance. Talk to us about what you guys are doing within the carbon markets.
Yeah, so let me go back a little bit the story how we end up over here, and I answered part of that. So when I was in the center, we started trading commodities and mostly relative value strategies. We are something called quantum mental approach. We are not the typical systematic trend following. We don't do that. What we do is to understand in depth any market that we are in, the fundamental, the structure, but we have a very quantitative and research approach. So let's say there is a seasonality in corn because of the yields. We understand that, and we put that into a model. run some numbers, put some mathematics behind that support our hypothesis, and if that makes sense, we apply it. Okay, that's in simple terms how we do it. So when we start to look at carbon markets in 2017, 18, just to be simple, Europe was having one of the biggest reforms in their carbon compliance market that basically was dealing with the oversupply of allowances they have. They create something called the MSR that basically says every single year we're gonna take out supply until reach 833 million. That is a number, and that was a very strong signal because it start to make this market viable. Second part, around 2019, Europe was making and other countries too a more better targets of reduction in decarbonization. Used to be 40% until 2030, and right now they were talking about 55%. In economic financial terms, I hope you understand that that means that the reduction of supply is going to be faster. And what happens when you have faster reduction? What you want is higher prices, because with higher prices, you really start to mobilize the behavior of the people. In that time, we start to look and check, okay, there should be an asset class to invest in this, because we could all invest in that time in futures and options, nothing like esoteric, like a spot or something like that. We couldn't go to the auctions. So we were like, oh, there's futures on this market? Yeah, it exists. There were like companies doing this. We were looking, okay, is there any retail option over here? Do you know how many ETF in carbon were in 2020? Yes, put a number, put a number.
0, 1.
Yeah, you're right, zero. Normally, that's that people say 5, 4. No, there were zero. But we knew because we start to make very good relationship with all the key players, funds, commodity player, power, policies. We were involved in all of that. And we knew that one of the largest ETF were going to come at the end of that year. That was the end of like September 2020. And institutional money were interested in this. Why? Because prices in that time was around 15 to 20 euros, and the market was expecting this big reform is going to take prices at least to 60 euros the next year.
Wow.
And we're like, wow, man. And we start to, and we understood this market for like 3 years, 4 years, not only Europe, but also California, RIGI, but that one was the most liquid. And we say, wow, this is a good opportunity. We know how to trade commodities. We understand this market. Why we don't launch? And we make all the tests, all the strategies, and we say, okay, why we don't launch? So we launched in 2020 that program. Prices were around 20, and in 2021 went to 110. So
Wow.
and ETF started. The ETF grew from zero to almost $2 billion in 2021, including the CalPERS, including all this money. So that flow came in, and that's how we did it. After that, prices collapsed because of the Russian-Ukraine crisis. So we never took, like if you think about that, you will ask, hey guys, why you don't just buy and hold? Because it seems that it's an asset that just go up forever. We never believe in that, because nothing goes up forever and nothing goes up only by waiting, right? You have volatility, you have things that you cannot control. So we having a more active approach. We can go long, we can have exposure, we do relative value. United Kingdom started the market after the Brexit in 2021, so we can do relative value, like imagine trading Brent and oil and TI and Brent, that similar but different, converge, diverge. So we start to do this type of active strategies to extract a little bit of alpha. Markets went down, so in some markets we start to be short, we start to add new markets, be long. So we have a very active approach. Normally, what we call with a little bit of long bias, but mostly very, very active on different strategies. That's how we approach that market.
Very cool. How does how does carbon fit into an investor's portfolio? You know, what type of investors are interested in this? And you know, I imagine just like everything else, like, you know, classic like 60/40. How do you guys kind of think about carbon in a portfolio?
So my idea, and I don't want to be too controversial, but we are here, we are a CTA, right? Or an investment firm, you know? We are here to produce risk-adjusted returns. That's our goal. That's how we exist. A bank exists
100%.
to do. Now, if you can do that while impacting sustainability, environment, and social, that's a plus. But our first goal here was to show that if you compare us with any other strategy, whatever, hedge fund, alternative, traditional, sharps, or Tino, we were competitive. Like, hey, what if the more institutional money and more real, like the big money comes into this market, and actually, why we don't answer this question? Actually, it makes sense and create value for institutional investors to have this into the portfolio. Not only Sigma Advanced, but this asset class as an asset class, right? And in Cambridge, in the University of Cambridge, that was my dissertation, was to create one of the papers to show how an European institutional investor, so we took the whole composition of a European institutional investor, and we did two things. The first one, you know, correlation doesn't mean causation. So we took a different approach called connectedness. I don't want to go into the technicals, but it's an autoregressive bar. Imagine a little bit more complex and more robust test to show if carbon is independent or not to the other financial markets and to the different stages. Of course, in 2013 is very different from today because you have the COVID, you have more financial institution coming, and you have financialization of carbon, same in commodities that became more dependent, or you have this spillover, right? A spillover with other markets. So that was the first part of the research. And we will see, okay, is this asset class still, or this market is still independent, yes or no? And we prove it in return volatility. And we found that even though in this case was only European market, not the whole carbon market, only the European one. We proved that even though since 2020, the relationship and spillover of carbon has increased with other markets, it's still independent. And we're like, wow, voila, now we have a reason and a cause why this can make sense into your portfolio. The second part was to prove and to test if adding this into this institutional portfolio makes sense or not. So preventing cherry picking, we took different portfolio optimization, the typical Markowitz, we took risk parity, we took omega optimization. So independent, what we wanted to see is like, oh, we don't just want to show the case that if you have your portfolio based on Markowitz of 60-40, you are fine. No, we wanted to see, okay, whatever asset allocation you follow, we want to see that your risk is reduced or your return is better in Sharpe, Sortino, whatever metric you want to use. And we found that as well. And that's when we say, wow, now we have something to show that is you're not going to invest in that because you have a big heart or because actually it makes sense for your portfolio. Because if you don't do that, it's going to be very, very hard to convince the real financial market to come into this. And we published that dissertation. It got very well received. And actually, we are writing a paper right now to publish an article on that. So that was one part of to attack more the institutional side into the Sigma, more active family offices, multi-strategy. I think actually is just showing that this thing create or aims to create what they want to have in the portfolio, something that diversify and create returns.
Yeah, very cool. Talk to us about, you mentioned some interesting things, obviously risk reward scenarios from a risk management perspective. What, relative to this asset class, what are things to think about, and how do you think about risk?
Yeah. So we can talk about portfolio risk, and we can talk about a specific asset class risk. I will go with the latest first, to the specific asset class. This is still a new niche market, okay? And you have a lot of volatility, especially in the less liquid markets. Just to give you an idea, California or the United Kingdom cap and trade system can have like big collapse. For example, during the Russian crisis, can drop 20, 30, even the EUA that is more liquid, drop 20, 25 euros in one single day. Imagine crude oil dropping $25 in a single day. It's a lot. The second risk that I always discuss about is geopolitical risk and political risk. Don't forget that even though this is a market-based mechanism, the rules are put in with the government, right? Yeah. And that's a risk that we have to deal with. And you see, for example, in California just happened that they're gonna make this big reform similar to Europe to reduce more aggressively the emissions of Midwest supply. So the prices actually went up in 2023, very high, very, very promising. And 2 months ago, they just announced that they're going to delay that until 2026. And of course, the market react, and it was unexpected. So you have this type of unique risk. As a market risk, how you manage that? Well, you can use the same risk management that you do. You can have your risk management as a portfolio, value at risk, CVAR. The issue with all of that is normally assumes normal distribution. So you want really to control your tail risk. How you control tail risk in this type of niche concentrated asset class portfolio? Stress test, scenario analysis, how my portfolio is going to react if, let's say, carbon prices goes tomorrow to 120. What happens if the prices collapse $40? How my portfolio is going to react on that? And if you don't like what you see, let's say my portfolio is going to lose more than 6%, 7% a day, well, you reduce risk, or vice versa. You put risk on that. I will say those are the main. Of course, the asset class is very related with power market and with natural gas, because utilities have to put, when they sell power, they decide to produce with gas or with coal, and put the number of allowances and the price that they will need. Normally, gas requires half of the allowances of coal. So
Hmm.
if you put that into numbers, you have the switch price, or that is when it's profitable to make gas instead of coal. You have the dark spread, the spark spread. So gas, for example, what happened in Europe in 2022, that increased a lot, a lot, a lot. In some point, start to deviate from the carbon price. You will need like a carbon price of 400 or something to be able. Prices didn't get there. Or this year, the TTF gas and all this issue with the winter and the reserve going down, does have almost at least zero point 0.6 correlation with EUA prices. That sometimes is not explained by carbon per se, but mostly by other markets. So you have to understand all these interlinks in this space. Those are all risk.
Yeah,
Very interesting.
makes sense. I mean, even thinking about like I guess if like the price of gas goes up, like naturally people will use less carbon, kind of less offsets needed.
Let me pause you there. We are not talking about offsets here, okay? Offsets doesn't exist in this market. It's allowances.
Got it. Got it. Got it. Yeah.
Uh-huh. That's very, very, very important.
Yeah.
Mhm.
Yeah. But same kind of concept when it comes to like allowances. Like you're going to use less of your or net, I mean, you'd think the market's going to use less allowances if the price of the commodities are higher.
Actually, the opposite. Okay, is quite interesting. Your question is very interesting. Let me part into that question. So, if gas prices goes very, very, very high, and coal prices and lignite prices stay not that high, actually, that it's cheaper to produce with coal sometimes than with gas. So, what happened actually when gas price goes high, that's why normally carbon allowances goes high, is because you as a utility, you calculate your margin, and you say, oh, it makes sense for me to produce with coal. I don't care that I have to buy more EUAs or more allowances at this price, because it's still more profitable than producing with gas. So actually, when gas prices are high, normally that's why allowances are high, because the utilities start to produce more with other fossil fuels. Okay, that
Hmm.
has changed a little bit with the increase and acceleration of renewables in some countries. That's the other part, another risk to take. Germany started to increase when the Russian-Ukraine crisis war started. Europe took the position and say, guys, we're not going to buy more Russian gas. And that was kind of an aggressive decision, because they have to import LNG from the US, LNG from Qatar, and it's going to be more expensive. And I think they got very lucky that they had two very warm winters. What happened is they say that, and they start to put a lot of money into renewables, okay? A lot of wind production. France reactivate or put a lot of the nuclear. France always had nuclear, but more. So renewables actually start to accelerate. And 2 years ago, and actually last year, the renewable production of wind was abnormally high. So that start to play also a role, because even though gases are high, and before used to be coal, and that's why the relationship of carbon gas goes almost together. Renewables start to play a role, because they say, hey guys, you know what? We don't need to produce gas or with coal. Renewables are going to take on that. So that's an external variable that start to play a role today. So today what we have, higher gas prices, TTF. Um, of course, they need to import as well. So we don't see um, those things going to 10, 15 as something happening years ago. They are in 50 right now, and I think that is what is pushing a little bit the UAs that actually rally around 25% just this beginning of the year.
Yeah,
Interesting.
really
Yeah,
interesting. Yeah, a lot of moving parts for sure.
very cool.
Yeah.
Um, I know we can maybe switch gears here. Talk about you mentioned earlier blockchain. I'm curious, is there a connection between the technology side, blockchain, relative to these carbon markets, or how did you get into the blockchain side? You talked about that earlier in the conversation.
Yes. So back in 2013, I got into the blockchain as a lot of people probably did with Bitcoin, right? And one friend, he said like, hey, there is this thing called Bitcoin. One guy that I know is mining with a laptop, and he gets some coins, and he needs some backup, to put some money. Uh, I don't know if that business exists now, but in that time you just put a couple of thousand, like few money, just to a guy to support his computer and his mining, and we share part of the profits and some coins. And that's how I end up in Bitcoin, to be honest. That was 2013. I remember our first Bitcoin that we got was around 100, 110, and I was like, this is interesting. I was like, I don't even understand what is that. I like the concept of like no intermediaries. I'm a little libertarian, so I love all these concepts, but I didn't even understand what was it. Later on, I was in the US. I never even pay attention of that. That thing was created in the wallet, keep growing. I didn't even forgot about that. And I remember in 2014 was the Chinese issue with the Silk Road, and I think the ICO stuff.
Hmm.
And unfortunately, I sold a bunch of my coins there because it was around 400, 500. And I was like, oh, I made 5x, right? And I don't understand this thing. What? Okay. And look, all this issue, money laundering, Silk Road. And I sold a bunch of that, and I keep the rest. And I was okay. And the thing started to go. Ether came, and I was talking to some banks here in the US, and they were telling me about blockchain technology. And they were starting to see, for example, using blockchain for swap settlement and using blockchain for settlement payments. And I was like, well, is this same blockchain the same of Bitcoin thing? Or is like, and when I came back to Colombia, for me, I was listening more and more and more, especially in the institutional side. Of course, the crypto space developed, Ether came out. I found Ether with the smart contracts as a technology, amazing. And I was like, wow, I think not only blockchain, but also it was augmented reality in that time. That time we didn't use the word AI too much, but more like big data. We were about big data, AI were coming, so we were like, I think all the industries are converging in two topics or two trends: technology, all of that what I mentioned. And I start to see that was the time, I don't know if you remember 2016, SDGs, all of that, sustainability, and a lot of stakeholders were asking for that. So I was like, oh, I think every industry has to understand those two things: blockchain, sustainability. And that's how I end up in Los Andes bringing that topic, because I really wanted to understand it. There were classes or research on blockchain, but mostly on the technical side, right? Of how it works. For me, it wasn't like that. It's like, hey, if I talk to you, Skylar, and you have no idea about that, and you're a CEO of a company, of a financial institution, and you want to understand what is this technology, I want to explain you that. If you want to create a team or a solution, what is that and how can you implement it? What is the best blockchain that exists? How that match with tokenization? And that was actually our focus on the research side, like very practical, looking at the strategic financial side, technology, and the legal regulation side, that implementing all of that thing. And of course, from 2016 until today, a lot of things happens. I spoke in the first blockchain conference in Colombia, and I was the only one who was not an engineer. And I explained the whole. I spoke for 2 hours on that, right? On the technology, what was proof of work, what was proof of stake, how you can use this. Not only focus on the crypto side. That was the main idea. That was 2017. I remember the CME was launching in December the first futures on Bitcoin. We were very very close to that. Bitcoin reaching 20,000 for the first time. And after explaining the whole technology, I got two questions the first time. Guess what question was it?
Got
I have
nothing.
no idea. Yeah, there's a lot of questions that could come up, but yeah, I'm curious.
In that time, it was only one question: is Bitcoin going to keep going up? And what is the price of Bitcoin? Or is it going to collapse?
Right.
And I'm like, I cannot say any recommendation. I'm regulated. I cannot say anything. I can give you my personal opinion. And I think, in that time I was thinking, look, this thing, you can see it in two ways. You can be the pessimistic or you can be the optimistic. In the optimistic, if you look at the economics, you have, especially in Bitcoin, this 21 million, limited supply. Uh, if you look at that, it's like US, right? Like prices has to go up, more adoption is gonna go up. Saying that, you can be the pessimistic way, that is like gold. If someone start to stop believing in gold, there is no real usage of gold, but gold can go to zero. Gold can cost $1 million or can cost zero. It depends on the really what we call a pure capitalism asset, right? Depends on supply and demand. And when they were asking me that, I was like, look, guys, you have all these pros, you have this adoption, you have these issues, but also you have all this development. You can carry literally $1 billion in a USB in a cold wallet. That makes sense. But it will all depend on adoptions. What I saw in that time is, well, the CFTC is taking a big step, and the CM is taking a big step, launching the first financial product, like, more accepted. There were other things going on,
For
but
sure.
and I was like, that can create adoption,
Yeah.
and it has these characteristics. So that happened over there. And after that, in 2020, well, we developed this class actually because a lot of people like what we were doing. We wrote a lot of research. We worked with different practitioner, universities, banks. How that came into sustainability, actually, like any other technology, right? I don't know if you know, but in 2018, it was created the first 100% blockchain bond, 100% blockchain digital bond. Okay, it was called the I bond by the World Bank, normal bond. Okay, why create it like that? Well, you have less risk. You don't need the settlement. Uh, Cost goes down. You have all the transparency, traceability, everything we know about blockchain, right?
Right.
And if you think you have bonds and you have another type of things in sustainable finance called green bonds, that the main difference is that the money has to go for green projects, and you can use the same. Or what about, for example, renewables? And that's when we enter to tokenization, right? And you start to see, hey, renewables, you can tokenize the project, or you can actually have an IoT that check in real time the production of renewables, and you can have a report in real time validated in blockchain, and actually that's a very powerful report, more than a third party saying, oh yes, you did that. So that's when the things start to converge, and that's what we're looking for. Actually, we're gonna launch a new venture focus more on that. But in the crypto space also is developing, is being adopted, is being accepted, right? A lot of things came, and I think that's also a very very interesting side, that actually one of the reasons we decide to be more flexible, and to do what we did in our firm, is to explore this type of opportunities that are being developed.
And that's really cool.
Yeah.
To hear the kind of journey of, obviously you saw the technology, but the convergence in real time.
Oh yeah, 100% is one or the other. Yeah.
Yeah. That's really cool. Yeah. Amazing.
Yeah. So talk to us about what you guys are working on that side of things. Then are you um, are you guys launching a new fund in the crypto space?
No, what we are doing right now is us. That's a very interesting. We are launching like two ventures here, two different companies. With all this experience, you will imagine around the world, a lot of people start to ask me a lot of things, not only about the CTA side of investment, right? We have a very very strong quantitative team side in derivatives, in that you can apply for different industries, right? You have the crypto space that, of course, is becoming more institutionalized, that need a lot of analysis. So we say, hey, why we don't really like some crypto funds or some crypto traders, prop traders telling us like, hey, can you run this analysis using machine learning, using this type of things to analyze this? Well, we don't do that. We're a CTA, right? Let me ask my team if someone is interested, and maybe we can consult to advise you in that. And other guys from the power industry, with actually energy, say that in English, when you with the battery system, or actually the miners, actually, they have to actually look at the curve and see when is more optimal and less cost to mine and things like that. They're asking, this is a lot of data. that you process. So we were working in something called Sigma Quantum Solutions. That what we want to do is to provide data science projects and be actually the quant side of all these sectors, right? When you have a quant infrastructure is quite expensive, right? And you have to have the quants, they can leave. You don't, and some of them they don't even know that, and they just need from a simple project that is analyzing all this power, efficiency, and data from the crypto space, from the actually energy space that say evaluation company came and say, hey, a private equity firm wants to buy us, but they want to have an estimate of, let's say, the reserves that we have. How can we do this? So all of that is data science and quantitative side. So we were like, they were asking me that, and I was like, I don't know how I end up. I came here as a CTA or like as a professor, and you end up probably from the academic side, right? And I was like, oh, there is a really interesting opportunity, and I love it. And there is another small part that we have been involved a little bit more and more, that is quantum computing. Okay, we are all training right now. I'm making another studies education on quantum computing, because I think quantum is still very far as a the hardware is needs to do, but you can start to apply algorithms, and some things start to make sense. For example, when you run Monte Carlo simulations, when you do risk optimization, portfolio optimization, a lot of things start to make sense, and we're like, hey, let's add that into this venture. Same kind of similar with blockchain, more than the CEO who wants to implement doesn't even know anything of like that. Like telling like, hey, this is what is happening. This is your potential solutions. Of course, we cannot implement a lot of them. Some of them we can. So that's kind of what we are doing in that venture. Basically, is to be the data science quants of not only the financial sector but the power and the crypto as well. And in a small part, start to develop more in the quantum computing side.
Yeah, that's really cool. Obviously, that's a big,
Exciting.
space and growing.
Cryptography is going to change with quantum. So defense, a lot of things. So it's very
Well,
fascinating.
it's interesting, and kind of goes back to my military days using cryptography. I was a linguist in Intel, and things have changed. But to your point with quantum, you have to upgrade all the cybersecurity issues, right? That the
Yeah,
old technology has, right? That can be broken
yeah,
instantaneously. So yeah, that's pretty crazy.
Yeah, you're in a good spot too. I mean, with the
Yeah,
universities like connections too,
yeah.
so that's
I mean,
very
that's exciting.
cool.
thank you.
Yeah.
Yeah.
Cool. As we start to wrap up here, Carlos, anything else on your mind? Anything else you want to talk to us about?
No, basically, thank you so much for having me. Hopefully, it wasn't too much. We will talk about carbon, quantum, blockchain, skydiving. I love the skydiving part the most.
Yeah.
We're learning some cool stuff here.
Talk
Yeah.
more about that, but no, really, I love it. Like, I when my kids grow, I want to teach them, like, the discipline, the preparation, the pressure, everything that teach you. I don't think only that is sport, but different sports is fascinating. So, really cool, and thank you for the
Yeah,
invite.
thank you, man. Where could people go to connect with you and learn more about your company?
My Twitter is at CA
Hmm.
really simple, like Carlos Arcila, CA Arcila, or feel free anyone to connect, send me a message in LinkedIn. Please not spam, but I'm happy to talk and discuss with everyone.
That's awesome. Well, this has been
Mhm.
great, Carlos. We really appreciate the time. This has been a fun conversation, and we'll make sure to include all your contact info in the show notes as well.